Happy Gudi Padwa to everybody. Optimism in the air. Thanks for tuning into the trade setup on this very good day from the market's perspective. If you are a bull, let's take stock of the global news. First, actually, let's take stock of the US markets and what they have done overnight. So, good moves there. Even the Nasdaq actually outperforming the Dow and the S&P, which was not quite the case day before. Remember that it was about slightly lower than the Nasdaq and the S&P in yesterday's session. But the reversal in the Nasdaq actually doing well. The stock futures are currently flattish, by the way, ahead of the big Fed decision. And the other cues, I think, steady as she goes. No big changes there. The dollar index still sub 103. The 10-year yield still sub 3.6. The S&P VIX maybe VIX marginally off from the yesterday's level, but yeah, steady as she goes. Now the global news flow, quite a bit around China, I must say. So Biden and US have said that they're going to stunt the growth in China for chip makers who are getting US funds. So that is part one. And Vanguard, the, the key go-to place for passive funds, according to Bloomberg, is planning to shut up business in China, which is a $3.9 trillion fund market. And that is quite something, a decision really to see. I mean, let's see if that happens. If it does, it'll be quite something really. Oil has held on towards risk-on rally ahead of the Fed decision on interest rates today. And Asian stocks have climbed in a risk-on trade ahead of the Fed decision as well. So that's the major news flow. The SGX Nifty, which actually, and the Nifty did really well yesterday. I would reckon that SGX should be showing some optimism, not too much, but showing a little bit of optimism, if you will. Not in the red is actually not bad. Now, what is it that the trade setup, therefore, for the day looks like? That's the key point, isn't it? So, well, I think yesterday BFSI and RIL both led the up move. These were the two dogs in the market per se, in addition to IT, and both of these came back, and which is actually a good thing. And it's a very good chance for this same momentum to continue given the global uptick. In fact, there are multiple notes on Reliance Industries in the last few days which are suggesting contra buy calls, and it certainly remains the stock to focus on. On last count yesterday, I had known of three notes. Today there is an addition of CLSA, which I'll tell you about. So watch out for the big boy. It could be an interesting one to monitor. Yesterday was up 3%, by the way. Let's see if there is more in store. I would also watch out for CV players and auto anchors in the CV space in the session today and the next few days on account of what Tata Motors has done, and presumably some of the others might do as well. So that is to be watched out for. Now I mentioned RIL, CLSA. Let's bring that note because it's got a market belief as well on CLSA's part. Now they are saying that sentiment as per their proprietary India Bull Bear Index has hit 91% bearish mood ahead of the Fed meeting. Barring the huge declines of 2008 and 2020, they say that they have seen such bearishness 10 times in the last 15 years, and 9 of those 10 times were good entry points. Now, guys, remember, I spoke about something similar when it came to a Jeffries note. At that point of time, the Nifty was 17,500. We went down all the way to 16,850 odd. So don't quite know if this turns out to be true even in CLSA's case. But I think they're making a point that 9 out of 10 times this has indicated positive returns. They expect the Fed to raise market confidence and appear less hawkish, which may drive a sharp rally. Now, if the Fed does that, then most certainly there'll be a sharp rally. Let's see if that happens. To raise beta, according to CLSA, they say that to raise beta ahead of the event, they're adding Reliance, Hindalco, and Indus to their portfolio and exiting Infosys and NTPC. RIL, fourth note, even though this is tactical in nature, fourth note from a large brokerage in the last 10 days or 14 days, quite something. Let's see if Reliance continues the momentum in today's session. Oil has bounced back a little. If anything, that helps the sentiment on upstream. Let's see, we'll watch if that happens. What about stocks to watch in the session today? Tata Motors has done an interesting thing, and then we'll try and get in a M&M view too. But Tata Motors first. They've announced a price increase for commercial vehicles. They'll be implementing a price increase of up to 5% on its commercial vehicles starting April 1st, 2023. Now, viewers, maybe I'm not completely right, but here's my thought around this. I believe that input cost pressures have actually eased. They really haven't gone up meaningfully. For Tata Motors to up the price increases or up the price thing by about 5%, it's not 1 or 2% thing, 5%. It's not a very small price increase. I reckon it will be margin accretive, and I reckon others may follow suit. And therefore, I think that CV players, by and large, Tata Motors, Leyland, some of the others might be in focus. CV suppliers might also be in focus. Is this also a bit of show of confidence that the demand looks okay? Well, demand has looked okay in the last few months when you see the auto sales numbers. So this, to my mind, is a positive move. Let's see if it reflects in the stock price movement. Tata Motors isn't exactly the CV play; it is more a JLR play, but this is certainly a slightly positive piece of news, according to me at least. By the way, sticking to autos, Mahindra and Mahindra, according to a Mint report, it says that the company is in talks to raise up to $1.3 billion by selling stake in the electric vehicle unit. Now, Tata Motors has done something similar. When that happened, it did have a bit of a flavor, add a bit of a flavor to the stock. Does this add a bit of a flavor to Mahindra and Mahindra? A ranked out performer for a better part of the last 12 months and has had a tough time in the last 2 or 3 odd months, to be honest. Does this kind of rev up M&M's stock price fortune? Well, let's see. I think we'll know if this happens, by the way, of course. But this is the Mint report. We do not have confirmation of the same. I'll be honest out here. Okay, what else? Hindustan Zinc, they've approved the fourth interim dividend of 26 rupees per share with an overall outgo of 10,985 crore rupees. Doesn't surprise. As my colleague Hilal was telling me, becomes a net debt company from net cash, which is fine. Cash generation will happen for Hindustan Zinc, considering the business that it is in. And this doesn't come as a surprise because we know that a parent Vedanta also is looking for all sources of cash. So it doesn't surprise me at all. Let's wait and watch what happens to Hindustan Zinc in this session today. HG Infra Engineering has been declared the lowest bidder by North Central Railway for redevelopment of Kanpur railway station of 677 crores. Orders from railways are coming in multiple ways, not just for wagons, not just for tracks, for modernization, and therefore infra players also out there. Quite clearly, a large capex provider, if you will, is railways. Quite stunning the kind of ordering that is happening from that end. Harsha Engineers, the stock listed on 26 September and the lock-in ended yesterday with 55% of the equity being unlocked. The stock is marginally above the offer price and therefore may not necessarily see selling, but it's a large portion of equity getting opened up. Though engineering companies are being sought by everybody, so we may not see the selling, but never know. Do watch out. If there is large selling, then you know why that's happening. Greenlam Industries, Asiana Fund 1 bought about 33 lakh shares. My guess is, the name of the fund, name of the unit which is sold is different, but my memory serves me right, it's an Asian Paints promoter group entity which has sold about 2.63% stake yesterday. I just thought I'll bring it to the notice of everybody. Then some brokerage notes. EMKAY Alternative Research on Ujjivan Small Finance Bank. They say it was up 5.2% yesterday with delivery volumes almost twice the weekly average, and it's breached its 200-day EMA, which is of 23.7 from below, which according to them is a positive sign. A rising RSI, which is 35.8, and if the stock breaches its 20-day EMA, then it can push the stock price to 30 rupees. So it's a bit of a trading call from EMKAY on Ujjivan Small Finance Bank, so do watch out for that one. Now, everybody's been caught up with IT, so I thought we'll spend some time on this one before we wrap up today's trade setup. So, Morgan Stanley has a bull argument. The note came a few days back. Nirmal Bang has a bear argument. The note came 2 days back. Let me bring it up. So Morgan Stanley says on cycles and earnings that they've marginally trimmed their constant currency revenue growth forecast for FY24. They believe that the 2-year growth trajectory should even out irrespective of the macro cycle. And they believe that we are in the midst of a middle stage of the current digital transformation cycle, which could last for a few more years. And therefore, they sound constructive on demand largely. for IT over the 2-year period. They've also put out some thoughts on margins for companies. And on that, Morgan Stanley says that they see tailwinds outweighing the headwinds, which drives the margin expansion for IT services companies. They have trimmed margin assumptions on account of concerns around sticky on-site wage inflation, but they still expect margins to improve in FY 24-25, over a 2-year period. They largely don't sound too concerned about IT demand. Nirmal Bang has a different view, and Girish Pai is a veteran when it comes to IT, and therefore his views should be taken on board. He says that US regional bank crisis has wider implications on IT services demand. The indirect impact of recent regional banking problems can be material, according to him. The collateral damage to the US economy may get reflected in the asset quality of the SIBs as well as the revenue of Fortune 500 enterprises. Fortune 500 companies and the SIBs form a very significant part of the revenue base of Indian IT services firms. Now, that is something. It's a it's something that a lot of people are writing about. There is no proof as yet. Unfortunately, we haven't seen too many IT companies come out and speak about this. We've put in requests, not striking luck as yet. Maybe most of these questions will be answered when the results come out. But I think this is important and deserves notice or deserves mention that this could be one thing that has brought down these stocks quite materially. Now, the thing is, um, I read a Morgan Stanley note on HCL Technologies today. This is today's note. And they are quoting the management. They're saying that in a US investor roadshow, the management mentioned that HCL Tech has no exposure to regional banks in the US, with 99% plus of its BFSI revenues coming in from large banks and insurance companies. And they expect outlook for BFSI to be strong in the next few quarters, led by ramp up of a couple of recently closed large deals. So here's the management saying that we are nonplussed by all that's happening because our BFSI vertical has zero exposure to the regional banks. Now, which is a statement of confidence. The point is, if indeed there is a slowdown by and large across US, does it materially impact the discretionary spend of even the non-BFSI companies? That's a question I think that Nirmal Bang has raised. But the fear in the market is about BFSI. And here's HCL Tech coming out and saying that from a BFSI perspective, they do not get impacted at all. Quite stunning, really, the play of events. And I think, to my mind, viewers, the proof of the pudding will be in the guidance that the companies put out. Are they confident? Are they putting out saying the guidance saying that we will grow at the levels that we are supposed to grow? Or are they citing uncertainty, as Samir Arora was saying in the interview to us day before yesterday? I think that will be the telling point. Fishy, not fishy really, but what I'm saying is that the waters, even if they're not troubled waters, they are certainly sketchy at this point of time. The outlook is not exactly completely clear. Maybe prudent to try and fish in some of the other waters currently until clarity emerges. That's it on the trade setup. Hope this was useful to one and all. A very happy Gudi Padwa. May this be a harbinger of great things to happen in the new times ahead. Thank you for tuning into the trade setup.